Hi, today's Saturday, January 28th, 2023. I am Jason Shapiro with crowdedmarketreport.com. Today I wanted to go through a little bit about the COT charts, and I know this is going to be a little bit basic for some of the people, in particular the people that have been on Crowded Market Report, because we talk about this a lot, how to read the charts and how to look at it, but we have gotten quite a few new followers on both Twitter and YouTube in the last few weeks, and I've gotten a lot of requests when I post a COT chart, like, what is this? How do I read it? What am I looking at? So I'm going to put a video together here and try to explain it. And I'll start by saying, just like just about any chart, you can read it and look at it any way that you want. So I'm going to take you through how I read and look at it, and hopefully that helps. So let's just dig right into it. Let's start with the COT chart itself. So what you have here is you have three types of people involved in the futures market as classified by the CFTC. And basically the reason it happens is that if you are a legitimate commercial hedger, like let's say a farmer, and you have wheat growing and you want to hedge your wheat, and this was the whole purpose of why futures markets existed to begin with, but you want to hedge your wheat, then you are considered a commercial. You can prove that, and it's just a check mark right on your, if you open a futures account, you are a commercial. And what that gives you is lower margin rates, because obviously you have the physical to back it up. So you want to classify yourself as a commercial, all right? So everybody who's not a commercial then is a speculator, and they break those up into large speculators and small speculators, or what they call reportable and unreportable. And that's because in the futures markets, as a way to stop people from allowing them to corner a market or something, if you go over a certain amount position size, you have to report that position size. And each market is a little bit different for what size that is, but if you are big like that, you are a reportable, or what I call a large speculator. And everybody else, me, you, and the rest of everybody, is considered a non-reportable, or what we call a small speculator. So those are the three classifications. And what this chart shows, the red, as you can see down here, is the commercial position. The blue is the large speculator position, and the yellow is the small speculator position. That's how the chart lays out. And just for the record, and for a little bit of self-promotion, these are charts of the COT that we put together in Crowded Market Report, and the reason that we did this, quite frankly, was I didn't really find any over the internet that I thought were any good. And this data is free from the CFTC. You download it. You can download it into TradeStation or whatever, but I just didn't like any of the visuals or any of the ability to sort of use it and change dates and all that I could find anywhere on the internet. So we created this, and it comes as part of the package of what you get when you join Crowded Market Report. I think there's also an option where if you don't want to be involved with Crowded Market Report, there's for a very low annual price, we will send you these charts as well. But like I say, there are free places to go to find Commitment of Traders reports. I just never found them very functional, and I never found them very good visually. So we created these just as an aside. Anyway, let's get back to enough of the self-promotion. So I'm going to use lumber here first as an example, because it's been a good trade. So what I like to do, I like to pick major market turning points, and I use positioning and psychology as what is going to highlight that for me. So when I see the large specs getting very short, I'm looking to buy. And again, as an aside, the net position here is zero, because for every long there's a short. So if you're going to find speculators very short, then you're going to find commercials very long, right? And people like to argue what all that means, right? Commercials, well, that's the smart money, because if I'm a farmer and I'm buying a bunch of wheat in the futures market, it means that my wheat crop is not doing very well, so therefore I have to buy at the futures market to hedge. Yes, there's also an argument that hedgers, over time, hedging is a cost, right? So you lose money as a hedger, which is why speculators come into the market to capture that money from hedgers. And I think I think both are true, because I think in the second one, where the hedgers, it's a cost and they're losing money, and the speculators are capturing that money, that is called, to me, trend following. That is why trend following makes money over time. But I find at market extremes, market turning points, these speculators have gotten way too short, and therefore they get squeezed the other way, right? So here's the lumber chart, and there's a few important things here, right? And let's just take the easy one. Okay, here is the first week of January, where speculators, as you can see on this chart, were the most short that they've been, right? Well, lo and behold, if we go to the chart of lumber, in the first week of January, lumber bottomed, right? And it's gone up in those 4 weeks about 30%. So it was sort of a pretty massive trade. That's the easy way to look at this, I would call it, right? That's when it works. And let me highlight right there, the commitments of traders is not perfect data, just like no data is perfect data, right? Nothing works all the time. Nothing is the magic wand, right? What I like to think and what I have found is that what commitments of trader does is it helps me to highlight where good risk reward trades are, and it also helps me to stay out of trouble. If I were short lumber and I were to look at this, all right, and I was short lumber because whatever fundamental reason or technical reason or whatever, and I were to look at this, I'd be like, you know what, I don't want to be short. At the very least, I don't want to be short lumber here, okay, because people are way too short. It skews the risk reward because, as I personally believe, the discounting mechanism in markets is participation. So if everybody's discounting in bad, lumber's going down, the risk reward is not as good. So anyway, now let's get into the bad things about this. Sure, I just showed you, hey, at the low, at the place where speculators were most short, that ended up being the bottom in lumber. Great, but we have the advantage now of seeing that, right? You could have said the same thing over here, right? Because we haven't seen this yet, right? If you're waking up, in the middle of September, right? This is September 6th. You're saying, oh, gee, this is the most speculators have been short, right? So we go back to our chart. September 6th was here. Well, there was a decent low in lumber there, but it did make new lows again. Early October, a nice move up here, but again, came back down and then made the new low there. Not perfect data, okay? Doesn't work all the time. But truthfully, since October, being short lumber has not been great one way or the other. So at the very least, it could have helped you get out. At the best, you could have traded these things. And look, while it showed them very short here, by the time we got to October, they had gotten out of those shorts, which was what that move up was. And they're not short anymore, so you're getting out of that trade and then maybe looking to put it on here. But what I'm trying to say is there's part art and science to this. And I've said a million times, COT alone is not reason enough to put on a trade, okay? Just because speculators are massively short does not mean I'm going to get long. You have to look for market, just like any system to me or any process, you have to wait for market confirmation first. So I'm not going to get long lumber until I see some bad news for lumber, like bad housing numbers or bad housing start numbers or some kind of lumber inventory numbers that are negative and the market doesn't go down again. And that, quite frankly, is exactly what happened on this day right here, which was the low in lumber, right? This was on January 6th, and there was a housing number that came out that was extremely negative, and lumber gapped down, made a new low, closed up on the day. That's market confirmation, and that's market confirmation in a market that is showing people massively short. That's how I trade, okay? And that's how I use the COT. Now, there's another thing about COT. We're looking at a chart here, and it goes back a year. Okay, that's great. And it says, oh, well, speculators are very short, looking at the past, compared to the past year. Well, here it is going back all the way to 2015. And this is one of the good things to think about our charts, is that you can go and you can choose which years you want to show on here, right? So I can go back all the way back, to 98 if I felt like it. I can also take different markets and not just do them one at a time. I can look at sectors, so I can take all of the stock indices and put them into one chart. I think that's where our charts are pretty good. But anyway, so lumber, you can see actually this was the shortest specs have been, going all the way back to 2015. So that's a pretty good thing. But a lot of times you get these charts that only look back a year, and you find that while it looks good on a year basis, if you really look back longer, that may not be the case. So how do you get around that? Well, again, it's part art and part science. The classic way to get around it is just like any other indicator out there, like let's say RSI. I trade RSI. Okay, what RSI? 14-day RSI, 28-day RSI, 100-day RSI. I trade moving averages, 50-day moving averages, 100-day moving averages, 200-day moving averages. There's what I call a look back period there. So you have to do the same thing with the COT. It becomes an oscillator of how long or short they are, but in that oscillator, there has to be a period that you're looking back. Do I want to look back compared to a year, compared to 2 years, compared to 5 years, compared to 10 years? And sort of the classic way to do that is you back test it all, which can be very, very dangerous, clearly. That's sort of the art part of it that you have to look at when you do this. And I have a look back period that then gives me the levels of how long or short people are. And I do put that in my report every week, what my look back periods are, but there's no magic to my look back periods either, which is why the market confirmation is as important, if not more important, than just the COT alone, okay? But that's how you read the COT charts. Let me give you a couple other examples randomly just to make a couple points. Here's copper. Now, if you look at copper here, right? So yes, they were massively short all through here, right? Which is when copper bottomed, and now copper's gone up, and now they're getting long. It looks like they're getting pretty long here, right? But if you go back to this, the longer term chart, and you pick copper, you can see that, are they really long here compared to history? I mean, there's been a number of times where they're much longer. Look how much longer they can get. Does that mean they're gonna get there? No, right? But what I'm saying is what looks long on the shorter term chart is certainly nowhere near where they possibly could get long in copper, right? And one would assume if they're going to go from this long to that long, it's because copper is going to go up, because most people tend to be trend followers. So that's the COT, and I think that, you know, just as an interest, the one that has caused a lot of interest these days, clearly, is this bad boy right here, which is the NASDAQ. This is the 1 year chart. Well, this is the shortest that speculators have been in 1 year, and the longest commercials have been. And that's very interesting considering what the markets are doing. They're actually selling into this rally. Usually you find them buying into the rally because they're either getting stopped on their shorts, or they're getting squeezed, or they're getting bullish as the market starts to go up. So just for the fun of it, let's take a look at the long-term NASDAQ chart. There's the long-term. So they were longer, the commercials were longer here, speculators were shorter here. Well, you know where that is? That was September of 2020, which was the first pullback after COVID. So COVID hit, bottom came, market ran, pulled back a little bit, and people got mega short there. And that's when the market kind of continued to rally. But outside of that, I don't see a lot of periods here going back to 2015 where speculators were as short NASDAQ as they are now. Let's go back longer just for the fun of it. And this is kind of how you can play with this stuff and start to develop a feel for what you think is good and what you think is not good. And quite frankly, just like anything out there, sometimes it just doesn't work. I mean, that's where the more important things in trading come in, such as risk management, stop losses, sizing, and realizing that no matter what you do, not everything's going to work, right? Anyway, this is them short. They were shorter that one time here, and they really haven't been shorter going all the way back to, it's funny, they were getting short in the early 2008, and they gave up into the summer, and then that's when everything crashed. Right? And then they got short in 2010 here. But there's not a lot of places where they're as short as they are now. And I would argue that there's not a lot of places where they're as short as they are now in a market that's going straight up, which is what the NASDAQ has been doing since this highlighted this. Okay. So anyway, a little bit long-winded, but that's sort of how I look at the Commitments of Traders reports, and that's how I read the Commitments of Traders reports, and that's how I use the Commitments of Traders reports. And I think that it can help a lot in your trading, in particular with risk reward, which is what it's all about. So if there's any questions on that, please let me know, or comments, please let me know. And we hope to see you on crowdedmarketreport.com, and I hope everybody has a good week this week. Thank you.